Hello everyone, Charles Moon here for Prosper Trading Academy, and today I am going to teach you on how to use momentum with stocks. Now, momentum is a name that's thrown around a lot, and it's really kind of viewed in several different ways. It's also based on time frame. So let's describe it in three different ways here. In the very short term, momentum can be carried based on breakout levels. Breakout levels are always going to be important. Maybe some active shorts are coming in at a daily double top and it breaks, and all of a sudden we hold that level for support. There's a lot of shorts that are trapped up in that situation, and it really becomes what's known as an emotional event. Human emotion takes over. Panic from sellers is the most notable one, but also the FOMO from buyers. Now, for those that don't know what FOMO means, FOMO is an acronym that's short for fear of missing out. A lot of active day traders will also look for this particular chart pattern and look to play what's known as a breakout. Now, specifically, breakouts are price movement that could be pretty dramatic in a very short period. Basically, people are looking in for a quick ripper to the upside. Now, when sellers start recognizing that, they know that this stock could go against them very, very quickly, so they start panicking and look to exit. This now becomes what's known as a one-sided event in the marketplace, right? Buyers are trying to jump in right now. They're not trying to limit in. They're trying to get in right now at that current price. So they're getting in with a market order. With short sellers, if they need to get the heck on out and they need to flatten, those orders also come in executed as buy market orders. Now, if they have stops and they're holding and those stops get triggered, those stops will also work as buy market orders. You see how that works? All of a sudden, there's so many different variables, and the market all of a sudden is on this huge buy market rush, and all the asks or the offers get lifted, and these bids start rushing up. There's a big transition in price. The momentum from that could carry it forth. Sometimes the breakout can be very limited, maybe 0.5%, 1%, but sometimes these breakouts can extend to 20, 30, 40%, depending on the stock price. The momentum of that emotional event carried that stock price higher for no fundamental reason, more of a technical based trading setup and on core demand at that moment in time. That's where short-term momentum could come into play. Now, this isn't just to the upside. If we flip the markets, right? Buyers panic out, sellers want in. Now all of a sudden it becomes a sell market event, and we see these stocks drop like a rock and continue down. The momentum is carrying forth from these events that's leading to range extension one way or the other. Now, in a longer time frame, we could actually look at these moments and actually see follow through the following day. So on the daily chart, I actually use two specific indicators to kind of help me understand if there could be follow through momentum. Number one, the first indicator I use is an ATR. Average true range. I use it on a 30 period. So basically what it's tracking is the daily price range of a stock over the last 30 trading days. When we exceed this number, say it's at 2.58, which means the stock moves $2.58 a day. Maybe for the day they traded $3.25, it's traded larger than it normally would. For whatever reason, whether it was a news event, a fundamental event, whatever the case may be, we know that there was new participants in the market to make the stock move greater than it normally does. Now, there is a kicker to this. If the momentum was to the upside, we want to see that close within that top quarter, maybe top 30% of the day's range. If it's to the downside, then the bottom quarter or the bottom third of that range. The closer it closes to the highs or lows, depending on where the momentum went, the better the setup is. The second indicator that we use is a volume average. Not all platforms will give you an average of the daily volume. You could use websites like Yahoo Finance, CNBC to kind of track and gauge what the recent volume average has been in the stock. For me, I actually like to track it over a longer period, 50 trading days. So my indicator, the volume average, is on a 50 period average. Now, if the volume for that day that we exceed that ATR is also above average, that once again signals to me there's a lot more money that flooded into the stock and a lot more new active participants getting in. So let's say, for example, a stock XYZ, we could even say Facebook, normally trades in a $7, $8 range, traded in a $13 range. It went from, I don't know, 250 to 270, right? Whatever it is. And it closes near that level. Maybe the average volume for the day is around 25 million. Let's say it traded 45 million. That's way above average, and we traded way above what it normally does, and it closed on the highs. That following day, I will be watching Facebook closely. If they open below the previous day's highs and it breaks those highs, I'm looking for immediate range extension. How far it could go, there's no dialed in metric to tell you exactly how much a stock's going to go up the following day. But what I do know is that it could carry over, not just for one, but for 2-3 days. There's been situations where a stock has gained 40%, 30%, 20% in just a matter of days. And it always kickstart with larger than normal trading volume and a greater than normal trading range. Now, again, if we get those two metrics, right, but it closes mid-range, it tells me that there was huge buyers and also huge sellers, and it was balanced. There's no definitive conviction in one side or the other. Truth of the matter is, when we close on those highs or lows, the demand remained high either on the buy side or the sell side. And that's where we could see the momentum carry the stock price further over the next day or so. It's an easy way to spot opportunity in the markets for carry through either to the upside or downside. And truth of the matter is, if you could get a good dialed in opportunity, knowing which way the stock could possibly go, it makes your job as a trader so much easier. Now, I do want to caution you, there is a point where you could be buying in way too high, chasing after the dream. So keep in mind the context of how much the stock has already moved in the short term, and you actually have to recognize if you're getting in a little bit too late. Sometimes it may be best to just sit on your hands and sit on the sidelines here. All right, ladies and gentlemen, do me a favor. If you happen to like the video, click that like button, subscribe, click on that notification so you don't miss any future videos that we drop. We're going to be dropping more gems, ladies and gentlemen. Peace and love all.